Brian, we've talked about life insurance before. Here is a new one, leveraged life insurance. What is that?
Yeah, I have been talking about the 5 categories of investing: the bond market, the equities market, real estate, insurance company products, and cash equivalents. Under insurance company products, I broke it between annuities, those for accumulation, those for lifetime cash flow, and the other one, permanent life insurance. So this is an offshoot of the permanent life insurance part of that, and this is leveraged permanent life insurance. So I think the best way to give an example of that is to go to real estate. I think most people understand some basic concepts as it relates to leverage in real estate. So for instance, let's say that rental houses are $100,000 and I have $100,000. I could go out and buy one house, and when that house goes up in value, I get a gain on that $100,000 investment. But let's say instead I decided to buy 5 houses, each with 20% down. Now I am paying interest, however, now I have $500,000 of equity, or actually of value, total value, that could be appreciating. And so I've leveraged my opportunity for growth. Same concept can be applied to universal life. You can have a universal life policy that can grow tax deferred. Eventually you can take that money out tax-free during your lifetime, borrowing against your own future death proceeds, or you can leave it to your heirs as a life insurance payout someday, tax-free. Now what if I like all those things, I want that. What if I said to you, well, we could do a leveraged version of that. We could let the bank pay your premiums and you just pay the interest for a period of time, and you could leverage your results if everything works out according to plan. So there's more risk with a leverage policy, just like there's more risk with $500,000 of real estate than there was with $100,000, but potentially more return. It's kind of the same concept when you're talking about premium finance or financed fixed index universal life.
With the leveraged life insurance policies, are there qualifications? Are there minimums?
Yes, I was asked just yesterday, well, this sounds kind of too good to be true. I can leverage my way into tax-free cash flow, have these great results. What are the negatives? Well, one of the negatives is it probably isn't going to do a lot of benefit for you unless you have at least 15 years before you can start. Another thing is, if I'm talking to somebody that's 75 years old, they might say, well, this sounds great. And I'm saying, well, you're not going to qualify for life insurance the way that this is intended, and you don't have 15 years. But I think the biggest detriment for most people to get into this is it has high net worth or high income minimums. So on the net worth side, you got to be worth at least maybe about $5 million outside of your principal residence. Or if you're making, say, $250,000 at your job, those are some qualifications. So that kind of disqualifies most people right there. So you kind of have to have some really strong finances, either on the income side or the equity side, in order to even qualify to look into it. You have to be of decent health, not too old, and have time to wait.
Brian, thanks for telling us more about leveraged life insurance.